Good morning, everyone, and welcome to TradeStation's morning market briefing. I am Don Prattle. I am coming to you remotely, and so there's a bit of an echo on my line. I do apologize. We are doing our best here, and Mary Ellen will do a fabulous job as soon as I mute out. Today, we are looking at some sharp declines on the opening. U.S. stock futures fell sharply overnight after the president had issued a trade threat to China, so there's now an impending trade war between our large economies. FedEx, Evertz Technologies, Oracle, Flybe Group, they all host earnings conference calls today. U.S. Census Bureau reports May housing starts. Analysts actually expect the level to expand to a seasonally adjusted rate of about 1.3 million units. Later on today, Fed speakers include the U.S. Fed President James Bullard, who gives a presentation on microeconomics of price and wage setting. Arch Capital Group hosts an Investors Day today. Remember that everything we talk about here at the morning briefing is for education purposes only. All the symbols and all the trading ideas that we discuss are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind anywhere where a TradeStation affiliate is not authorized to do business. Remember that active trading might not be suitable for you, and options trading does carry a high degree of risk and may not be suitable for all traders. I've posted those important pieces of disclosure information in the chat panel for your reading pleasure later. Our presenter today, Mary Ellen McGonagle, is the founder of MEM Investment Research, which provides timely equity research to institutional portfolio managers as well as to self-directed investors like us. She possesses a highly developed knowledge of institutional equity markets, achieved through the marketing of research to top-performing fund managers. We'll turn things over to Mary Ellen right now for our morning market briefing. Welcome to TradeStation.
Hi, good morning. Yes, this is Mary Ellen McGonagle, and we could be in for an interesting start to the markets here today based on what we're seeing over in Asia. Their market, of course, closed down, and with the impending potential trade wars escalating, what I wanted to do is go ahead and give a bit of backdrop as far as my background so that you can have a little flavor to my approach to the markets, and it would provide a good backdrop to what we're going to be reviewing today. So I do currently have my own investment research firm, but prior to that, for over 15 years, I was with William O'Neill and Company, where I worked with portfolio managers, analysts around the globe, really advising them on the markets as well as individual stocks, but most importantly, reviewing with them and educating them on the O'Neill approach to the markets. And that approach is generally seeking out strength in the market, uncovering stocks poised to outperform the markets, and all of that was with, and still remains to be, with an eye toward high growth stocks. Over my many years looking at various charts and uncovering stocks that have outperformed the broader markets, there are several characteristics that are common among these stocks, and certainly earnings would be one of the primary drivers, as well as sales. So again, with an eye toward higher growth, faster moving stocks. But of course, with today, what is going on in the markets, what I thought I would do is go ahead and review. We'll start with taking a look at the broader markets and where we are. So again, with an eye toward strength, what I have, or I'm showing here, is the Russell 2000. IWM is the ticker symbol for this. And this is a weekly price chart for the Russell. And hopefully you can see rather quickly just how strong these small cap stocks have been. I've overlaid a couple of simple moving averages on here. The blue is a 10-week, better known as a 50 200-day simple moving average, and the purple line is a 200-day or 40-week. But again, really pointing out the strength here in these small cap stocks. The Russell 2000 is hitting a new high in price. And the reason for this is a very, very strong earnings season. So the fact that small cap stocks are doing well is grounded in very, very strong fundamentals. So small cap stocks currently, based on Thomson Reuters, they're poised to have a 2018 earnings of 26% greater than last year. And if you, for comparison purposes, the S&P is on track for 11% growth. So they're really, there's a reason that these smaller stocks are doing well. And again, earnings is one of them, but there are several other reasons as well, and that is the tax cuts, the Trump-induced tax cuts. These smaller stocks are better positioned. They're better leveraged to really benefit from these tax cuts, as well, of course, as a growing economy. Now, the reason I'm focusing on this fact is in the event that these these China trade wars do escalate, small cap stocks are a little more buffered than certainly the large multinational U.S. firms that deal globally. If we do see an escalation not only with China but elsewhere, there is an expectation that some of these larger global, for instance, Boeing, of course, has been hit. They derive quite a bit of income from China, so there's an expectation that they could suffer. And other larger companies such as Caterpillar and certainly Apple would be another example. So those firms very well may suffer, whereas again, smaller stocks are not going to be as exposed to potential trade wars, to any shifts in currency, primarily because for the most part, a large part of their sales, their revenue is domestic. It's US based for a lot of these smaller companies. So I did want to point that out. We're going to be looking at a couple of smaller stocks that currently are exhibiting strength and that do look healthy. And another recently very strong area of the market has been the NASDAQ. I'm pulling up QQQ. So when we look at the bigger picture, the broader markets, the NASDAQ is another area that is hitting a new high in price. And a lot of that has to do with, of course, technology. The NASDAQ is very heavily weighted in technology stocks, but also the larger, what are called FANG stocks, and that would be Facebook, maybe not so much Apple, but certainly Netflix and Google. All of these stocks have been exhibiting quite a bit of strength. So what we're looking at again is a weekly price chart. You can see Google poised to hit a new high. So these four horsemen, so to speak, the strength in these stocks is bolstering the NASDAQ. But again, also these technology shares. And so when we talk about technology and also then try and funnel that into smaller cap technology stocks, it is going to drive you into computer software. Now, I've talked about this in the recent past, how these computer software companies are doing exceptionally well, and in particular within computer software, it is cloud computing. There continues to be a demand for cloud computing stocks within software that can really compress this data, that are offering new ways to store information and then sort it. So also an area that is considered defensive is computer software enterprise. And the reason is because these stocks have monthly income or annual, depending on their billing cycle, but these stocks are going to be, again, a bit more defensive. They have income that is going to be already built into them because they are charging an fee for users. So let's take a look at an example of a smaller software company. that could be one that may be able to withstand any market pressures. Now, of course, this particular stock has already had a significant move. The ticker here is APPF. This is a cloud computing software company that exemplifies the strength that we've been seeing in some of these stocks. Again, this is a weekly price chart, and this particular company provides services to real estate management and legal companies. So they're really quite focused in who they're servicing, but they are again offering this cloud computing services. So you can see the stock has really done quite well. We're looking at a weekly price chart. So let's go ahead with this particular example and drill down to windows that are going to be a bit smaller. I'm going to start here with a daily. And again, let me just put the right ticker symbol in, and we'll drill down and see if we can identify potential buy point. Again, you can see I've overlaid some simple moving averages. So with the daily, I have this green line is a 10-day simple moving average, and then the purple is a 50-day. So what you want to do with these simple moving averages is twofold. You want the price of the stock to be above this simple moving average, but you also want that simple moving average to be in an uptrend. So what you can quite quickly determine here is that this 10-day simple moving average is acting as support. So you can see where the stock is. When it's had explosive moves, it will pull back to this 10-day moving average, in essence providing you with an opportunity to enter the stock. So from here we can see that this particular stock, APPF, and I feel it exemplifies a lot of these smaller, faster moving cloud computing software stocks. This stock is what we call extended above this 10-day simple moving average. So you would look for this type of pullback as your potential entry point. Now I'm going to go ahead and drill down just a little bit further so we can look at an intraday price chart of this very same stock, APPF. And so what I've done here is with this 15-minute price chart, again, simple moving averages, I tend to use a 5 and an 8. So again, in this instance, the blue is the 5 and the purple is the 8, but the same principles apply as far as identifying when that price enters into an uptrend. It's now above these now upward trending simple moving averages. There is one other technical overlay that I use quite a bit, and I have it displayed down here on the bottom. It's called the RSI. It's your relative strength indicator, and it is a momentum indicator. What I'm going to go ahead and do is add one other line that can be quite helpful in using this technical overlay. And what I've done is put a horizontal line at 50. 50 is your net neutral for your RSI. And again, you want to use these simple moving averages, but when you can marry it with the RSI trending up above that 50, that would get you right here as a buy point. Hopefully you can see that. And currently the RSI is above 50, so it is in a positive territory with this particular stock. So this is one of many examples where you can look at the weekly to get a bigger picture. Is the stock in an uptrend? Is it healthy? And then drill down to the daily to identify pullbacks to the 10-day. And now on the intraday, we're drilling down even further to really refine your entry point in some of these faster moving stocks. So let's go ahead and move a little bit away from the concept of these computer software stocks. And what I wanted to focus on now are, there have been several super fast moving IPOs out of China. And of course that is going to be a focus today. So let's go ahead. I'm going to go back to the weekly price chart here, and we're going to take a look at these really super fast moving IPOs out of China that I mentioned. IQ is the first one that we're going to look at, and this is a weekly price chart. Believe it or not, it's been a really explosive stock. This is Q again is the ticker symbol, but it is a spin out from Baidu, and this company is being touted as the Netflix of China. They provide streaming media to the Chinese population, and over the last month alone, this stock, and that's going to be each bar here is 1 week, so over the last week alone, month alone, this stock is up 116%. So pre-market, it is trading down, not a lot given how expansive the move's been. It's only down about 4% pre-market, but when you're looking at, again, IQ is one. I'm going to show you another one. BILI is the ticker. This is Bill, really quite similar. This is a youth-focused media platform stock out of China, and this is up over 100% over the last 2 months. Same principle where it is selling off pre-market in anticipation of the trade wars impacting some of these Chinese stocks. And then one last one, HUYA. And they're all going to look quite similar, really super explosive moves. But depending on where we go with how these trade wars, if they do get to a point of no return, if you will, and the markets suffer, of course, all boats will sink theoretically. But for those of you that are a little more optimistic as far as the outcome for the trade wars, days as today, potential sell-offs could be opportunities to enter these faster moving Chinese IPO stocks. So let's take a look at the daily. This is IQ, that first one that we looked at, the Netflix of China, so to speak. There's not a lot of history. It's a recent IPO, so you're not going to get a lot in the way of, this is the 10-day simple moving average. But you can see really how extended it is on that daily. Let's go ahead and drill down into the intraday, the 15-minute. That's what I tend to like to use for intraday trading. And so here is IQ, and of course now that we have this intraday up, it's going to be a little less extended looking, but let's go ahead. I'm going to go ahead and draw the horizontal line again with the RSI, and that's easily accessible here on TradeStation. You can overlay the RSI below your price information. So again, keying in on the price action and the simple moving averages, and also using this RSI to help guide you. Now, this particular stock has been super fast moving, but you can still use this same concept where the price breaks up above your simple moving averages, your RSI, then trends upward. So not only the position, but you want the line to be trending upward. So it can really help you with your placement of entry and exits. So in the event that this particular stock does sell off once the markets do open, when you are looking for an entry point, you want to key in on, here is another example. This is taking us back to June 7th. On this intraday. So you want to key in on when the price moves back above the simple moving average if it sells off today. And then the slope and position of the RSI. So both of those are going to help you if you are inclined to buy on any weakness. So we can use this same intraday on BILI. And again, very, very similar as far as keying in on potential buy points. I'm going to just go ahead and quickly, because for me it's quite helpful to have that 50, because you can see here this could be similar to what we may experience if these stocks sell off. Again, intraday, you can see it breaks below these simple moving averages. Your simple moving averages are then in a downtrend, and instead of this being support, these simple moving averages now act as resistance. But again, this type of turnaround here, when it the RSI breaks back above 50, the stock breaks above your simple moving averages. That's what you're going to want to be keying in on. Again, if you're looking for a potential weakness and then a turnaround, and we can do the same with HUYA, which is a live streaming gaming stock, another recent IPO out of China. All of these companies have very, very strong revenue growth. So the fact that they are moving in such an explosive fashion is not entirely out of line, but it has been a bit overdone. So market actions similar to what we may experience today, again, could present you with a buying opportunity. So let's go ahead and put back in this horizontal line here, and HUYA, you can see again what you are looking for. This RSI is breaking back above this 50, which is called your neutral, your net neutral, and the stock price breaks back above your now upward trending simple moving averages. So that is what I would tell you to key in on in the event that these stocks experience the weakness that is coming through pre-market at this point in time. Now, another thing that we can do in preparation, or as far as keying in on the markets and where you may want to focus your energy, we talked about small caps being sheltered, if you will, or certainly more buffeted or buffered from potential trade war action. There are other areas within the U.S. stock markets that are similarly somewhat protected. As mentioned, when the markets sell off, there are certainly periods where there is nowhere to hide, so to speak, but I'd like to review another area in the U.S. markets that are U.S.-centric and might be, again, less subject to any kind of big market sell-off. So I'm going to go back to the daily price chart, and we can take a look at, for instance, SWFT is the ticker symbol, and it's not pulling that up, but I can certainly pull up another stock in that industry group. Okay, so here is JBHT, and both of those stocks are transportation. They're U.S. trucking companies, and as you can imagine, they are going to be primarily based in the U.S. as far as their revenue source and their activity. So these transportation stocks, such as JBHT is JB Hunt. It is, again, a U.S. trucking company, and these transportation stocks have been doing well. As you may know, that the economy, we're looking at an expansion last week based on very strong U.S. retail sales numbers. A lot of Wall Street analysts have raised their expectation for U.S. GDP growth. It was at about 2.4. Now we're over 4%. Is some JP Morgan in particular, that's their estimate for the second quarter GDP. That's very, very strong, sound growth. So when we're seeing an expansion in the economy, retail sales numbers are up, there's going to be a need to transport those goods to the U.S. consumer. And one other area is consumer confidence is at an 18-year high. So all of that is going to support continued revenue growth in these U.S. transportation. So JBHT is one example. With the daily, I do still have that 10-day simple moving average and then the 50-day. So you want to see your simple moving averages in an uptrend, and the same principles apply. These stocks are not going to be as fast moving, but the same idea as far as using pullbacks to your simple moving average as a potential buy point. CSX could be another example within these transports. This is a rail company, and you can see quite clearly how the stock is in a very, very healthy uptrend. Again, looking at a daily, we can look at a weekly to kind of get a bigger, even bigger picture look at some of these stocks. This is a weekly price chart of the SX, the rail company. And again, simple moving averages, your 10-week, your 50-day is what you want to key in on for here. And you can see if these simple moving averages are in an uptrend, the stock is finding support at these upward trending simple moving averages. That is really quite healthy. So we're getting close to the open here. I did want to review some other areas of the market that are, again, U.S. centric, and that's going to point you towards some of these retail stocks that are based here in the U.S. and that serve the U.S. consumer. We can take a quick look at Best Buy. BBY is the ticker. This, of course, is a well-known large box electronic retailer. Also, they have appliances and other U.S. Consumer goods. And what I wanted to point out to you here, we're looking at a weekly price chart on Best Buy, and this is the stock had a very big break about 4 weeks ago on earnings, and in fact that break did present itself as a buy opportunity. This purple is your 200-day. So while the stock did experience about a 14% sell-off, it did find support at this upward trending 200-day simple moving average. So this would be one example, but just kind of pointing you in the direction of areas that you can look to as they could be a little more buffeted. Etsy, this is a smaller, faster growing. This is a company that provides a platform for craftsmen within the U.S. to sell their goods. And this big gap up here, we are looking at a weekly. It did have this big move last week. It was up about 29%, but that was news based. It was because the company is going to be increasing the fees that they charge those that use their platform from 3 to 5%. Investors liked the news, so the stock did have a big expansive move last week, but it still looks positive despite that 30% move. So now I'm going to drill down to a daily with Etsy, ETSY, as an example. So here is that gap up. This happened last Thursday. You can see it is extended well above this 10-day simple moving average, but your RSI is still in positive territory. Now, when you're looking at the RSI, when it gets red up here, that means that the stock is overbought. It's a little extended, and it's not a reason for real concern because it can stay overbought for some length of time. This again is a daily chart, but it is with an eye toward or an anticipation that at some point the stock will pull back. It's overbought, and you can see that eventually it does come in from this overbought. So right now Etsy, as an example, is just entering into that overbought position, but it still looks quite healthy. And you would drill down again to that intraday to really help refine your potential buy point in a faster moving stock such as ETSY. All of these stocks, Etsy is on, I do have a bi-weekly newsletter that is it identifies these faster moving stocks. So Etsy is a stock that was on our list, as well as several other fast moving stocks last week. So I would urge you to take a look at my website. I have a lot of courses there that can really help you with your trading. And here we are at the open. Best of luck with your trading today.